Thursday, February 6th. I got a lot to go over, including big announcement, 9 p.m. tonight. Myself, Nader, and James Ford will be live doing the stock battle. 2 weeks ago, we had a stock battle. Each of us picked one stock, and we said 2 weeks from now, who's going to win? Who has the best one? I picked a strategy for MicroStrategy, 1 hour strategy. These guys just picked the actual stock. I think James picked Tesla, and Nader went totally against, and he just picked MicroStrategy. Well, guess who won? We don't know yet for sure, but more than likely, I think it's me. And you know why? Because I had a strategy. These guys just picked the stocks, and they said, you know what? We're just going to rely on earnings. I said, let me go and do a Trendspider strategy. Okay, I'll show you the strategy right now. I will include it in today's newsletter. Okay, we can look at it. I had a strategy for MicroStrategy based on a 1 hour time frame. Okay, the strategy is very simple. It's based on a MACD. Okay, it gets you out with some moving averages, and crossing down of the MACD gets you in and out. But you can see, I think we started this on January, I want to say the 29th or something. Got you in, nice little gain there. Okay, this one, nice little 1% gain. This one, little loss. Then we got a little gain. Okay, but if you just bought MicroStrategy, you wound up losing. I can look at it right now. Let's see, stock battle. Let's see, MicroStrategy, Nader picked MSTX at 57. And James picked Tesla at 411. Tesla right now even is at 372. He lost money. So James lost money. And if we just look at MSTX, which is what Nader picked at 57, he's at 43. I picked a strategy. I said, I don't want the downside. I don't care about the earnings, but I just don't want the downside. And so I picked MSTR. Now, if MSTR shot up, and we were in a huge gain, then Nader would have won. This particular strategy over 65 days makes you 5.9% on MSTR. Okay? This is just a strategy. You can see the ins and out. It wins 54% of the time. Your average win, 2%. And if we just go over the last 60 days on this, we can go to like a daily. Look at the last 60 days. You go back to November, it's just flat. But this made you 5.9% versus losing 10%. Having a strategy is key. Make sure you have a strategy. And strategies come in Trendspider. You can get Trendspider by going to my Linktree, linktr.ee/daily stock pick. It's the top one. You can save up to 63% right now on Trendspider, okay? If it's within your budget, go for the advanced. Why do I say the advanced? Because you get unlimited one-on-one training. Think of it this way. If you don't know what you're doing with any technical strategies and you've never used a charting program like this before, you get a product expert to sit with you unlimited for the next year. You could take one a day. You could take one a week. You could take 2 a month. That's what I would suggest. Okay, when you take 2 a month and you go here, you pay $82 a month. That's $41 per session. If you take one a week, it's $20-something per session. And you get the tool for free. Plus, you get my 4-hour algorithm. You get this 1-hour algorithm. You'll get everything. You're able to import everything into your system that you see me use right here today. So, again, 9 p.m. tonight on Substack. If you go to the Linktree, everything's at Linktree, and you're not subscribed, go and subscribe to the Substack. Okay, it's on Linktree down here, Daily Stock Picks newsletter Substack. And you can go, and tonight we're going to discuss the results. We're going to discuss some other stuff. It'll be fun. Again, it's just live. And the big product news, you can now view this live on your computer screen. Before it was app only. You had to download the app. Today you can sit there and watch it on your just on your computer screen. So they're making lives available on the computer screen. I like it. Now let's talk about the market. Stock index futures are muted as job cuts. I mean, the job cuts were bad, and the market said, we don't care. I mean, the market just didn't care. If we go and look at the futures here, it's 919. They've been up. And at 8:30, they didn't change. Market just didn't care whatsoever. Let's go and take a look at the 4-hour algorithm, and we'll go and take a look at QQQ. I like to look at the NASDAQ. Well, we have an entry today at 525. You're trading at 527. Does this make an absolute? Well, let's look at the performance. You make 52% versus 77% buy and hold. For me, with this index, I want to buy and hold. I'm looking at entries. I will buy more QQQ today. I have a bunch of cash sitting on the sideline. I won't go balls deep. Why won't I go balls deep? Well, look at the weekly, okay? The RSI is still at 60. I'd like to see it under 50 or touch the 50. Every time we touch the 50, we go for a move higher. That MACD is still stretched 15 points above the oscillator. That's not good. This stuff may not make sense to you, but if it doesn't make sense to you, just go and learn about the MACD, go and learn about RSI, and go and learn about what a candlestick shows you, and go and learn how to draw a trend line. I will give you just a hint. You want to touch 3 points. If you touch 3 points on a trend line, it is valid. More lines means more validity. And I've drawn this green trend line. Now, I'd like to see us pull back, but is it needed? No. For the short term, I like to be adding to my positions. I don't do it on a day. You could add $100 every Friday. You could do that in QQQ and be in VOO and be perfectly fine. Find a strategy that works. For me, the 4-hour algorithm identifies a good entry point. It's not always perfect, but it wins 55% of the time. You know, you could basically write a strategy that says, okay, if the price closes above the 9-day and the MACD is above the strike line, I want to get in. You could write that strategy and you can back test it. Again, Trendspider is so good. But I will be adding to this. In the newsletter, at the end of every newsletter, and again, the newsletter during the week is free. You can go down to the bottom of the newsletter and absolutely all of the stocks that I scan, there are a ton today. I will tell you, there are about 60 that I just scanned, that I just went over live and I said, oh my God, look at all of these. We're in a bull market until we're not. But when I look at that weekly and we're all the way up top, we're trading at 526. If I go back, 526 was the high on December 2nd. We haven't moved anywhere since December. It is now February 6th. So if I bought in December, I'm just back to even. Doesn't bother me. That's 2 months. With an ETF like QQQ, I don't care. I just want to look for an entry. I know it's stretched for the long term. But it was stretched back here in 2021 when it was selling at 400. Did I care that I bought at 400 during this time when it dipped at 284? I just continued to add for it because when in doubt, pull out. Look at the monthly. Okay, we're still in that upward trend. And the MACD extended, the RSI at 75. It is extended. I'm not going balls deep because of the long term, but I am adding to my position. When I need to sell and need to take profits, I'm perfectly fine doing that because I have such a long history of adding to QQQ that my average purchase price is well below where it is today. That's the strategy that I have for the ETFs. Now, congratulations to myself and anybody else that didn't panic sell INTA. Because INTA, we talked about it yesterday, how in the 5-minute, it dipped down 25%. Well, look at what it did. It gapped down, okay? It filled the gap. Good companies with good products, with good earnings and good management will absolutely win, okay? We can go in and we can look at INTA. It's a strong buy in the quant. This is the other tool that I use. It's Seeking Alpha. This is one of Steve Kress's top 2025 stocks. If you want to see the rest, you can just go over here to the left and look at this list. It is the top 10 list. Why do I put so much faith in the top 10 list? And why am I comfortable buying at a high on INTA? The reason is Steve Kress has done his research. Okay. Steve Kress has a history in 2023 and 2024 of making 173%, I think it was, with these top 10 stocks. Again, it's just an even top 10 stocks. If you have $1,000, you're buying $100 of each stock. He doesn't say, hey, weight this one more, weight this one less. You can do that during the year. You can absolutely balance your portfolio. But he just says, hey, if you bought these 10 stocks at the beginning of the year with an equal weight, then you're up 173%. So your $10,000 is now what? 10,000, 1170 or something? I don't know. Can't do the math. You do the math. It is what it is. So that's how I use this Seeking Alpha Premium. Now, you might say, Gary, you always tell us about the Premium and Alpha Picks bundle. So I took a look at the Alpha Picks portfolio. Year to date, this is the year to date performance, 6% versus the S&P's up 2%. Again, that's just year to date. If you go and you look at the overall performance, it's up 177% versus the S&P at 58%. So go to Linktree and go and get the bundle. Again, I'll point this out. There is a social request from today and a social comment from Francisco on YouTube. Hey, Gary, great show yesterday. I have got almost 20% on INTA in 6 hours. I bought it at $61 and it's now at $72. Seeking Alpha membership was reimbursed just on that one trade. I'm still finding a good moment to enter on the remaining Seeking Alpha top stocks, which, by the way, there are a lot in the list today, a lot in the scans list. So Francisco will be able to make more money, and everybody who doesn't get these tools, you're going to sit back and you're going to listen to my podcast and you're going to say, ooh, God, I wish I had gotten into those. I'm not telling you to go and buy these. I'm telling you to do your research. I am comfortable buying them because I've done my research. But the number one rule on this podcast is don't listen to a douche on the internet, and I am that douche. But the performance speaks for itself. Okay? Now, I took an edible yesterday because all the people that were touting, and Twitter was filled with them, cannabis is back. Aurora Cannabis jumps as medical cannabis. This was up 45% yesterday. That's huge. Let's go and look at it because I want to see, should I be in Aurora Cannabis? Let's look at a weekly. Remember, I always say this. There's another rule in this podcast is don't water your weeds. And add to your winners, don't water your weeds. And what that means is winning stocks you want to add to. Losing stocks you don't want to add to. Realize that a 50% loss, and mind you, no doubt in my mind, this is going to lose 50% again. This is going to lose 50% again. Right now, it's a buy in the quant. I don't believe this. The reason is the valuation, they're not making money. Okay? They're not making money. I just don't believe in the cannabis trade right now. It's not time. It's not time under Trump. He's anti-drugs. He's anti-stuff like that. It's just not time. And so when you look at this chart, realize that a 50% loss, say you bought at $1 and it dips down to 50 cents, just to make the math easy. That 50 cents that you have now, it takes 100% return to get back to even. If you have a 50, make sure you're not sitting in losers. That's what doing the research is all about. And you may want to say, hey, why is United Health? Why did it get taken out? Even though it's kind of holding up and it's sitting here. United Health, it was in the core portfolio. It's no longer anymore. And I took it out, I think, during this time, during period when Luigi killed the CEO guy. Too much drama. And then you've got drama yesterday where Bill Ackman says, hey, the SEC should investigate because we think that United Health has overstated their earnings. And he deleted the post. And now United Health is in a fight with Bill Ackman saying, hey, are you shorting us? The SEC should investigate. I don't need that. Wall Street says this one's a strong buy. I'd tell you, go and buy XLV. Okay. I want to go over my biggest movers in the portfolio, biggest movers in my personal portfolio, POWL. POWL is an alpha pick. The way I trade this, Alpha Picks tells me when to sell. I'm not trading it, but this was the biggest mover yesterday in my portfolio. Okay. Another one, another Alpha Picks, AGX. This is Argan, biggest mover. Entry in the 4-hour algorithm at 143. Okay. Another one, MOD, an alpha pick. The three biggest movers in my portfolio yesterday were all alpha picks that are down. I'm going to add more to it. I'm going to add more to that portfolio. I like them. Okay. Biggest losers yesterday, number one was Google. And we'll go over Google a little bit. I posted a chart on Google. I think I've got it later. If it holds this 193 level, and I'm looking at it just trading around there. And where did I get that 193 level from? A previous all-time high and back in July of last year. And so if it holds this, I think it's moving higher. Remember, Google, for me, and I've got this, I think I've got this posted somewhere. Yeah. This looks to be holding pretty well at the 193 level. The gap fill could happen if it doesn't hold there. Pulling the stock back from using the 50-day at around 188 to the 200-day at 178. I still like the stock. Okay, what I'm talking about is this gap right here in Trendspider. It's called a gap snake. If you don't have the gap snake on, I'd suggest you put it in because these are usually magnets for stocks. It's not 100%. It's just giving you a little bit of an edge over other people, okay, over other traders to know where is the stock going. Now, the MACD, back at the oscillator, the RSI completely oversold at 178. But the stock is dealing with the issue of they're spending $75 billion. Okay? That's the issue with this stock. But I like it to hold up. It's at 191. If it uses the 193 as resistance, like it did back here a couple of times, then you can look at it going back down here. And the 200-day is at 179. The 50-day is at 197. That's on the 4-hour. If we look at a weekly here, you can see the 50 days right at 172. But that trend line has not been broken. And if you look at the weekly candle right now, the low is 189. It's trading at 191 as the market opens up. Okay? Now, I forgot yesterday, we're in the month of love. So what this is from now until Valentine's Day, every time I do a podcast, I will give you an ETF or a stock. And I forgot to do it yesterday. So today I'm going to give you two. And what I'm going to give you is just spider sectors, okay? Pick your favorite. You can pick XLC, which we can look at right here. The 4-hour algorithm gets you in at 96. Okay, you're at 102. You can pick the consumer staples, XLP, which if you look at a weekly, it's been beaten down a little bit. Okay, you can pick a high-flying sector like XLE. If we look at this one, it's just trading against that resistance at 93. You're right at 90 right now. You can pick one of the best sectors, XLF. Okay, if you're going to beat the S&P, it's going to be by using a sector. I am in heavy on XLK, which you can see this is the technology sector. And if I look at a weekly on this one, it is still in a bullish run, but it hasn't done well against the other sectors. Am I hurting? I don't make moves casually in these. XLY, this is my exposure to Tesla. 40% of this ETF is Amazon and Tesla. I like it. Pick two of them. Okay, you pick two of them. How do you find two? Well, go over here, go to market data, and you can go and use these 11 sectors. Okay, you can look how they've done in 5 days. You can look at how they've done in 1 month. Year to date, healthcare is the number one sector, up 7.91%. We just went over Alpha Picks, how it's up 6%. You could be beating that with just XLV. Finance is up 6.93. Communications, 5.9. What's the bottom? Consumer staples and technology. So my portfolio is not doing great. XLY is the third worst. Again, when I look at my portfolio, it's not doing great. Am I worried about it? We're in February. So when you pull out 3 years, technology's up 46%. Communication services is up 44%. XLY is right here in the middle at 24%. If you look at 3 years on the S&P, you're up 34%. So anything below 34% in that 3-year range is underperforming the S&P. That is energy, financials, consumer discretionary, utilities, healthcare, basic materials, consumer staples. The majority of these are losing. The two that are super, super winning are XLC and XLK. Simple as that. And you can, XLC, I'm not super familiar with. I know XLK's got NVIDIA, all that stuff. This is Meta. Google, Netflix, AT&T, T-Mobile, Walt Disney, Take-Two, Verizon, Charter. You can buy this one. It's been a great ETF. But again, the 10 stocks that you want in your portfolio, I'd pick 2 of them. We went over United Health, and that, again, I would rather see you in XLV. I found this interesting. Honeywell confirms plans for a 3-way split. This is similar to what GE did, okay? So we can go over here and we can look at GE. GE stock, if we just pull out to a monthly on GE stock, a weekly on GE stock, you can see it's been doing really well since October. This one's split into 3. GE Vernova is one. If we look at a weekly on that one, we can see the IPO was March 2024. Look at that. And then the other one that it split out to was GE Healthcare. And if we just look at a weekly on that one, doing pretty well. So again, that's why I think this one's interesting. It's never going to be exactly the same. But if they're going to split into 3, this one might be an interesting one to play. Might be an interesting one to go into because we saw those 3 stocks were all doing really well. Now, why is Nancy Pelosi the greatest investor of all time? TEM. I mean, 3 weeks and 1 day, and she's up 118% in this one. This one started flying again. If you want a strategy to do it and you want to trade it with Pelosi, you absolutely can. My 4-hour algorithm got you in at 35 here. Okay, it got you in at 35. You could put on the screen. Remember, Trendspider has all of these things. You can do what's happening now. There's a Pelosi tracker, all insider trades above 5 million, CEOs. There's a Pelosi tracker right here. Pelosi tracker. You can add this to your setup. Okay, it lists everything that she buys. You don't have to have a separate strategy or a separate subscription for that. You can put all of that in, and it will show on your screen. They have a custom indicator that you could put on your screen. But that's why she's the GOAT. I mean, you can't argue. NVIDIA, she has killed it on. So, again, we went over Google, so I don't have to go over that one. Just breaking news. MicroStrategy is now just strategy. If you say MicroStrategy, you get gut punched. I mean, that's just, I don't make the rules. I just follow the rules. Somebody's going to pop out of the weeds, out of the bushes, and they're going to gut punch you if you say MicroStrategy. It's now strategy. I don't get it. They reported earnings. That was the big news. It is what it is. We'll go over this. Now, I brought up yesterday, Lisa Su on the call. This is AMD. Lisa Su basically said, hey, we're doing really well with AI. I likened her to Pat Gelsinger, who made everybody think that Intel was relevant for 5 years. When Intel, we can look at Pat Gelsinger on Intel. We'll just go look at a weekly on Intel. Let's see. This was Pat Gelsinger's rant. So he was making everybody sure, oh yeah, we're going to do chips. We're going to do fabs. And look at the stock. And then what'd the stock do when everybody realized it was bad? It just shit the bed. And Evan was all up in arms. How can you do that? She's the CEO of the year last year. That's not fair. Blah, blah, blah. Just look at the stock. I mean, if that doesn't tell you that this is the most overhyped company and why, the reason is it's still effing expensive. The valuation is not there for the growth. The growth is fine, but you've still got a PE of 33. You're still paying 23 times forward earnings, and the momentum sucks. And when you look at analysts, they're bringing their earnings per share and their revenue down. It's not doing well. So again, choose your chip companies. I've got personally, I own, let me get back to the core investments because I own NVIDIA, okay, which is in the core portfolio. I own NVIDIA. The algorithm makes you 295% over 24 months. I use this very similar to the Qs. I add when the algorithm tells me. It has 124. Look at the MACD. Am I adding today? The weekly looks like it's resetting. We are using 140 as resistance. You have earnings coming up on February 24th. I own this one. The other one that I own, and the other one that I own in a big way because I bought in March and I think April, I will start selling this for long-term capital gains. Broadcom, AVGO. Look at the MACD, it reset. You know, you could have bought this down here at, let's see, 196 as it broke 200. You are at 231 right now. This is Broadcom. They make custom chips. So when Google is out there saying they're going to spend $75 billion, they're buying their own chips from Broadcom. Okay, Broadcom makes those chips. The other one that I think that I own is Credo. Credo. Look at this. This is Top Stock 2025. So I own these three. Know what you own. That's the key. I thought this was great. Okay, Quality Stocks, great newsletter. Alphabet, great results, down 8%. Uber, decent results, down 7%. Evolution, decent results, it's down 6%. It tells you a lot of times these are overreactions, okay? Uber is back up at 67. Look at the algorithm get you in at 60, looks like 66, okay? We are climbing. Got you out right now. It will get you back in. This is a stock that I think is a $100 stock. Have we broken down? We're trading sideways between that 61 and the 80, and maybe 70 might be a resistance right now. So if you're buying at 67, expect some resistance at 70. This should be a long-term buy. This slide right here, this is still a good company making good. They're a good company. I mean, Uber Eats alone. Come on. It's not like this is going away. It's a strong buy in the quant. What does Wall Street think that it's worth? $88, 31% upside. This is still a good company. And Google, we just went over. Again, I think Google is fine. Now, another core portfolio stock that reported, Qualcomm. It's down 5%. I will tell you, it was a good quarter for Qualcomm. Okay, you can go and read the results. Fell about 4% amid investor concerns over demand for new smartphones, even as fiscal first quarter results beat estimates and drew largely positive results. Take a look at the chart. The chart is very clear on a 5-minute, and we'll go after hours right here, okay? This one shot up to 185. And you see that 175 yellow line right there? We're going to go over that. I'm going to tell you exactly what it is. But look at how it came down, okay? Is this really concern, or is this really just profit taking? We're going to turn off the after hours right there because I want to show you where that 175 really comes from. We're going to pull it back here. Look, okay, this goes back to March of 2024. The stock at 193 was a previous all-time high, okay? I think it goes back to November 2021, if I'm not mistaken. Let's see. Yes, back here. 193, January 2022, okay? But let's take a look at the 4-hour because we're going to focus on this 175 right here. Look, resistance in March as it climbs up. Resistance in April as it climbs up. Then it's used as support. And then as it comes down, you don't see support. It breaks right through and goes right down to 156. Where does it use resistance? Again, August 2024. It uses more resistance in September, uses more resistance in October, uses more resistance in November until it breaks down. Where does it use resistance again? Right here. So when you went up to 180 or something, you have to use 175 as your, my strategy. If I were trading this, I would have absolutely sold it. Now, it's a core portfolio stock. We can go and look at Qualcomm right here and see what Wall Street says that it's worth. $201, 21% upside. The problem is their growth. Again, the growth. You can read the analyze with AI. You can read everything. Okay, read all about this in this news, in this AI Analyzed with AI. It's basically an analyst report. But it was very clear on that chart. That was resistance. It needed to blow it out of the water. It didn't guide super, super high. I think Qualcomm will be fine. If you can get it under 160, I think you get it under 160. Now, Eli Lilly, they reported, okay, they're up 2%. Records record over twofold rise in diabetes. This is GLP-1. Eli Lilly is a core portfolio stock. Everything is priced into Eli Lilly. Okay, these previous resistance, that one at 794, anything underneath that you could buy for the long term, but it is very, very expensive. But what do we have now on the 4-hour? We have a 50-day that has turned. Okay, if you bought this 764 down here, you're doing really well. The MACD was down low. The RSI was low. If we take a look at a weekly, is it stretched? No. You've been trading sideways on this one. Look at that MACD below the oscillator. Look at the RSI at 54. Is it expensive? Absolutely, it's expensive. It's even though they double folded this one, okay, it is super, super expensive. Valuation, you're trading at a 65 PE. You have to know that going into it. The average Wall Street target price, 975. That's still 13% upside. Will you get there? The 52-week high is 972. What's Wall Street's price target? 975. Will you get there? You have it in the stock. It's just a matter of your time frame. So, I like that one. There's going to be somebody coming out and punching me in the gut. MicroStrategy. It's now strategy. They swell the loss, $1 billion on Bitcoin impairment. Did it drop the stock? Nah, it's at 1% down. It's a strong buy in the quant. This is a Bitcoin leveraged ETF. Okay, MSTR. I like it. I like to trade it in the 4-hour algorithm. We can go and look at MSTR over the last 24 months. This has made you 1,081% with 23 trades. It is less than once per month that you trade. Has you out right now. Okay, it saved you from that little drop. You win 39% of the time, but your average win is 65%. So you have to make sure that when you get into this, it's the right time. So take a look at the weekly. We still got a huge high MACD. Our RSI is at 57. Every time it's touched that 50 on the RSI, look at that. It shot up in the coming weeks. Every time it touched down here, September, it shot up in the coming weeks. So I would start adding to this and trading this if the weekly gets down to that 50 on the RSI. Again, it's just about strategy. You have to figure out what works for this, and then you go and back test it. Okay, ARM Holdings, this is down 6%. I like this company. The problem is it's very expensive, okay? And it was an IPO. So it's still rather new. So when you look at the 4-hour algorithm, okay, over the last 17 months, it's only 17 months old. There have been 16 trades. Let me just raise the red alert here. The algorithm makes you 209%. Buying and holding makes you 202%. Okay? You win 44% of the time. The algorithm got you in here at 161. You are trading at 163 right now. So if you wanted to buy this short term, you're looking at the RSI at about 55. Okay? The candle has come down. That 174, what's that line in there? That is from the previous all-time high back here in June 2024. Again, use previous all-time highs. If we go to a weekly, we just got the 50-day. The 50 days at 137. I would feel more comfortable with it pulling back there. But look at the MACD. It's not down super low. And ARM Holdings, it's a hold in the quant. Okay, it has been a hold in the quant. This one hasn't been a buy. The reason is it's very expensive. Look at the valuation. It's 111 on forward earnings. You are trading 111 times. Even the PEG ratio for the growth is expensive. But if you believe that chips are the way of AI and it's all AI demand, get ARM. That's it. Paid members will know that I was a big fan of Corning. Okay, Corning, GLW. I included it in the newsletter for the paid members a few weeks ago, and it's up since then, I believe. I mean, we can look at GLW. I put this one in. I believe it was sometime here, 48, something like that. It's now at 53. It was definitely before earnings, and you gap down, and now you're just heading back up. Okay, I like this one. Well, this one, Coherent, they reported earnings yesterday. They're up 17%. They're in the same place. Okay, it's number 2. Number 1 is MPTI. But look, number 3 is GLW. Coherent. I almost included this one. The reason I didn't, this market cap is $13 billion. And if we go to GLW has a market cap of $43 billion. I felt more comfortable with a larger market cap stock. Just me. But again, if you researched and you said, hey, I want the number 2 rated, then you're up 17%. Okay. Year to date, it's up 11%. 1 year, you're up 82%. You can read what they do. You can read all about it. But paid members, yeah, I like GLW. I may have gotten it wrong. Now, one in the core portfolio that reported earnings, Roblox. It is down 16%. I've gone over this one. The reason it's in the core portfolio is because it's a great trading stock. It's ranked number 3 out of 20. It is a hold in the quant. And you can see it's been a hold for a while. The reason is the valuation and profitability. Okay? They are not making money. Just understand that they are not making money. There are 33 analysts that cover this, and their average target price is 62. This was too expensive going into earnings. It was trading at, let's see, $73 yesterday. Let's go and look at the chart, because this one, I like trading this one. I liked it at 44. I didn't like it up here. The algorithm got you in at 52, got you in at 61. Again, I would have sold before these earnings. Look at where the MACD is. You go and look at a weekly on this one, and before earnings, I absolutely would have sold this one. Now, I'm not in it. Full disclosure, I'm not in it. And hindsight is 2020. And you see on the weekly, this was the range that I liked trading it in. Okay, once it got out of this range, I said, I want to look to this 44 as a support level. So far, I don't see a support level. I don't see it pulling back anywhere, maybe 56. If it starts getting into that 50 area, you can see we just got the 200-day right here at 50. The 50-day is still at 44. It's too stretched. It needed to reset, and the earnings didn't support that. So, tonight, we have Amazon. Oh, there's the Roblox chart. Staircase up, elevator down. That's just the daily chart. Tonight, you go over to Earnings Hub. We have Amazon, which I like. Core portfolio. I like this one going into the earnings at 220 more than I like it going in at 240. Is it a little too expensive? I mean, you look at this stock chart and you're just flying up. You're just flying up. The RSI is at 56. The MACD, little bit extended. We take a look at the weekly and it's extended. And you see that green line? That is support where it was breaking out. Okay. And the red line is support where it broke down. So if you stay within this, you probably have a $260, $270. We can take a look at that one between 218. So am I adding to this one? Not right now. This is the number 1 or 2. Again, if this one get killed, then I've got 2 days in a row where I get killed on Google and I get killed on Amazon. You can look at the earnings preview right there if you want. It's expensive. You will pay for the category leader. And it's not the number 1 of broadline retail. It's not the number 1. Again, I own this one in XLY, and it's one of my top holdings as well. Wall Street says it's worth $250. That's 5% upside. It's priced for perfection. So if you want to play something, maybe you could play AMZD, which is the 1 times bear. Has this one been lucky for you? No. But the algorithm just got you in at $10. Let's say $10.67. If that, if you think that this one's going to go down, maybe you want to play that one. I am not going to hedge. I don't do that kind of stuff. Shorting just hasn't worked in the past for me. I typically go long. That's just the way I am. But I like it. Social request, Francisco from YouTube. I will post that in, that comment. Again, he paid for his entire year subscription just with one trade yesterday on INTA, top stock. Then BDB 904. Maybe you're in Jacksonville, 904. Rocket Lab. Are you a fan of Rocket stocks? Here's the thing. I mean, I don't know if you're asking me if I'm a fan of Rocket stocks. I don't own it. So am I a fan of it? No. Do I have FOMO? Absolutely, I have FOMO. The algorithm makes you 243%. I should have been trading this in the algorithm. You know why? Because it protects me from the downside. You win 33% of the time, but your average win is 50% because this damn thing flies. Flies. It's a rocket itself. But I will tell you, it's overvalued. Okay? Look at the weekly. You don't have a 200-day yet. This one came out way back here in 2021. And they do have contracts. It's trading up here at 27. The MACD's super high. But let's go look at this. Now, Shai Bulor loves this one. Simon from 7 Investing loves this one. They have given great elevator pitches on it and why you should buy it. Wall Street has 13 analysts that cover it. They think it's $25, so it's 10% downside. You're down 2% today. Look at the valuation. They are not making money, but their growth is good. The difference between this and a total losing stock is that they actually have some revenue. Okay, they're not making money. They're spending more. It's an expensive business. But again, they're making money. I want to tell you a story a little bit about something like this, okay? It's a little stock called Nikola, NKLA. Okay, we can look at Nikola. And the 4-hour algorithm, again, this is just, you look at a weekly, it's a nightmare of a stock. But what I want to point out to you is something that when this stock came out like this, okay, it was here, reverse split adjusted. This was trading at like $3, okay, $3 at some point. This is a SPAC, so you see that. It's a little bit different than Rocket Labs, but it was a SPAC. And this one, they rolled an effing truck down a hill, okay? They said, we've got a new EV or a hydrogen-powered truck, and this is going to be huge. And then they got some designer to do some drawings of EVs that they wanted to launch. And the stock went from $400 to $2,800. Okay, just a few months. You had that. That's what Rocket Lab reminds me of. It's just too hot a stock. So if it pulls back, maybe you want it. Maybe you want to play Rocket Lab in the 4-hour algorithm. But as far as a buy and hold for me, there's too much in the new company that I just don't feel comfortable buying and holding like that. Again, it's been out for a while. They have some government contracts. People love it, but I'm not buying it because it's not good companies with good profits and good products with good management, great management, good company, good products, no profits. So for me, it would be a trade until I'm actually sure. Do I have FOMO because it's run up from $4 to almost $40? Yes. But I'm not getting sucked in. I'm playing a long game. This is not a 5K race. This is a marathon. So for my money, I'm going to trade in the 5K range. But the marathon, this isn't one of them for me. But again, if you can sleep at night putting your money into this, have at it. I can't. And I just know that about myself. Let's talk about the scans. Some of the scans in the core portfolio. We got NVIDIA with a buy. We're just, you know what? We're going to go and look at, let's look at market scanner. We're going to pull this one up. We're going to look at the core portfolio. And then I'm going to pull this up. We're going to scan this. That's how you run a scan. You just go and look at it. And you scan it and it'll pull up all the stocks. Now we can go back to the strategy tester because I want to pull this up and just look at exactly some of these stocks. We can go back. We'll run the 4-hour and we'll look at NVIDIA. NVIDIA has a buy, 124. Okay, QQQ. If you want one that has a lower expense ratio, QQQM, but QQQ, trading at 527. It's not up huge. XLK has a cross up again in the core portfolio of XLK and XLY because it's my freaking core portfolio. 234. Netflix is over $1,000. I think it's going to split. It's got to split. You can see the Fibonacci's up there. 1,021 is probably the next resistance level. And then 1,074, I don't think it has much more upside, but I think a split would drive this one huge. Simon Property Group, it's at 181. It's up 1%. Yesterday, 178, had their earnings, 2%, 4%, 4 point something percent dividend. So you got Dell, which is in the core portfolio. This one's up 1.18%. It's a falling knife right now. Don't like the stock. If you look at the weekly, it's completely reset. Their earnings are coming up on February 24th. I like it. Again, the AMD results don't abide by, hey, people are upgrading their computers. But I think these guys, again, ride the tail of AI. And Exxon will continue its drive to 120, that 119 level. If you want to buy it, maybe it goes down to 106 from 109, but I think it's going to rise here to the 120 level. Again, you've got to be comfortable with what you want. There are way too many stocks in the scans today. You're going to have to go to the newsletter. The newsletter is down here. It is free. Remember, 9 p.m. tonight, we're going to go over this. Remember, too, all of these tools are there to help you. I'm an affiliate of all of these tools, but my belief, you can use free tools. I don't need you to pay for these tools. But I've heard it from too many people over the years that I've been doing this podcast that, oh my God, why didn't I get into these tools sooner? Why didn't I start using it? Go to the newsletter chat. Okay, go to the newsletter chat up here and you'll see Eli is such a fan of Trendspider. Brandon, such a fan of Trendspider. And all the people who have bought Alpha Picks. You can go to the Facebook group and just look at I do not delete comments. The only comments that I usually delete are douchey ones. Not ones where it's like a negative. I just haven't had a negative comment. Now, if you need to use Trendspider, if you want to start to learn to use Trendspider, you can always text me and say, hey, how do I do this? But the one of the reasons why I use Trendspider is because of the contact us button down here on the bottom right. Okay, I have conversations with these guys like I'm a customer all the time. And they are so fantastic. They are there to help you. These guys, the customer service is top notch. So if you have any questions, hit me up. My DMs are open. You can hit all the socials are up here. You can go investigate for yourself. The Gary bundle includes Trendspider, which is this, and the bundle on Seeking Alpha Premium and Alpha Picks. That's the Gary bundle. These are the tools that I use to manage my very substantial portfolio. I don't use any other tools. What you see on this podcast is me talking about my book. So if you have any questions, hit me up. I will talk to you tomorrow, again, 9 p.m. tonight, Eastern time. Set your alerts. I think there's alerts on there, but I'll email out to the subscribers on Substack as well.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.